And I'm just going to go ahead and start with forex. And why forex? Because as I previously said before, I don't really like investing in this market right now with the current administration and the way it's being handled. And the uncertainty that it's creating makes it hard to invest confidently. Of course, there are gamblers out there who take chances and they win, and some are going to lose or whatever, but that's not what I do. I make informed decisions. I use data, I use statistics, probability, and that's how I invest. So if you want gambling and you want to roll the dice, you won't get that here. I'm sure there's plenty of videos on how to do that. But however, we are looking at the foreign exchange market. And the reason that I'm looking at the foreign exchange market is because the foreign exchange market is hard for Donald Trump to manipulate at a high level. Yes, he is manipulating a lot of the market intentionally to make money. But it's hard for him to manipulate this market because it's so deep and it's so wide that although his policies do affect the currency market to a great deal, they don't affect it so much that you can't predict it as much. Now, Forex is extremely risky in and of itself as it is already. You're using a lot of leverage, which means you can control a lot of foreign currency with very little of your own money. But with that being said, you win big fast and you can lose big fast. So for instance, if you have $1,000 and you place a bet, depending on how big that bet is, you could make, $200-300 in a few ticks or whatever, right? Or in several ticks. That means you can also lose $200 or $300 in several ticks. And one of the things about investing versus day trading is like, I'll say day trading is like gambling. You can bet a little bit, you can bet a lot, but investing, you make informed decisions and you gotta practice money management skills, right? You have to do the same thing with day trading to practice money management skills, but people get so caught up in their emotions that they tend not to do so, which is why they lose. And I had to learn it the hard way myself, so I'm not just speaking from a textbook. I had to learn the psychology behind it, and I had to learn it the hard way, in addition to reading. So I can tell you from experience. But that's why I like choosing investing, because when you slow down and you think your way through it, you tend to do better. Okay, so enough of me just talking about that, but I'm going to start moving through this app. And I'm going to go through just some general stuff. I'm not going to get too detailed in this particular video, but just so you can see that, okay, Antoine does know what he's talking about. All right. So you're looking at the quotes for the Forex market, and you see here, that is the dollar, the US dollar, the euro dollar, I'm sorry. That's the euro dollar. That's the pound dollar. That's the dollar Swiss franc, and that's the dollar yen. Now, as you can see, there are a number of different currencies you can choose from, and this is not even all inclusive. There are more than this, but today especially in this administration, I'm only focusing on the dollar yen and the euro dollar. Now, why is that? The reason I'm focusing on those two is because the dollar yen, it tends to move drastically with the betterment or demise of either country, but more so the U.S. because the yen is the Japanese currency. So the dollar yen pair is basically the U.S. dollar in comparison to the Japanese yen, just like the euro dollar is the euro that they use in Europe in comparison to the US dollar, right? See, the dollar yen is trading at 142.95, right? That's the bid price on it. Well, that means for every US dollar, you're getting $142.94 of the yen, okay? Versus with the euro dollar, for every euro, you're getting $1.14 and 14,000th of a cent. Okay, so yeah, the currencies can go all the way up to 10,000th of a penny, right? And you want that because that 10,000th of a penny, when it's leveraged a lot, that's how you can actually make your money. And you'll see that as we go. But anyway, we're focusing on the dollar yen because the yen is a safe haven when the dollar is doing bad. Everybody moves to the yen. So when the dollar's doing bad, everybody knows they need to run to the yen because that's where your money is safe, and you end up making a lot of money doing it that way. The euro dollar is more of a competitor to the U.S., right? So when one is doing bad, the other one is doing good. It's kind of like playing teams against each other. One team is doing really good at the time, and the other one has been doing bad all season. Well, 9 times out of 10, you're gonna bet on the good team, right? Because the other one has been just doing bad all season. That doesn't mean they're gonna do bad in every game. They've just been doing bad all season, so the probability of them continuing to do bad is high. So you kind of have these two risk profiles going. And I like to use them because both markets are very deep. They're very liquid. The spreads on them are very small. The spread is what you see when you're looking at the ask versus the bid price. Let me go to the dollar yen and let's go to the chart. Okay. You see where it says in the upper right hand corner where it's flashing red and blue, you see where it says buy. Okay, that is what we would call the ask price. That's the broker is asking you to buy the currency at that price. Conversely, on the opposite side, the left side, you see sell, right? In the upper left-hand corner, that is the what we would call bid price, right? So you're bidding to try to sell the currency to the broker at that particular price. Now, the broker is really just an intermediary. There are people all over the world buying and selling at the same time, and all they do is just match up your buy or your sell with somebody else's buy or sell, and that's how a transaction is completed. Okay. So when I say it's deep and it's wide, it's because there are a lot of people out there buying, and there's a lot of money moving around all at the same time, and all of it's moving for a bunch of different reasons. There's no one or two things that's moving the market. There are a ton of different reasons. So when people are technical trading, meaning all they're using is just indicators and charts, they're believing that all of that data that they do not know is being reflected in the movement of the currency. And what we're looking at right now is the chart. We're just going to pay attention to the upper half. We're not going to pay attention to the lower half with the dotted lines and the green and red lines. We're not going to pay attention to that right now. That's going to be for another video. All we're going to look at right now is just the chart, okay? And so the chart is the area at the top where you can see the green and the red candlesticks, okay? And people will use this chart. I'm going to make it a little bit more condensed so you can see overall, because I have it on a weekly chart. I like to leave it on a weekly chart because I like to see a lot of data all at once. The more data and statistics you analyze, the more accurate your analysis is going to be. So I like to use a lot of data. And so you can see the trend just looking at this. So I zoom in so that I can get a better idea of where we are in terms of the immediate price movement, right? Oh God, I'm all over the place here. In terms of the immediate price movement, so I can see where we are. Now I know looking at this chart, I can see that it went up. I can see that it peaked like 3 times. The second one got higher. The third one was not as high. And so that in and of itself tells me that it's possible we may enter into a downtrend. Doesn't mean that we are, but it's possible that we are. Anyway, with that being said, I'm going to place my series of trades based on that. Now let's get to the part where I said earlier, this is where Antoine proves that he knows what he's doing. We're just going to look at trading history real quick, okay? Now this is the trading history for the month, all right? You can see right here where it says balance, look across from balance, right? Look across from balance and look at the date. It says 2025, May 13th. That was the opening balance. All right. And then you have a series of trades, You have a series of trades. I placed some trades. They didn't do too well. I cut them out immediately. Okay. Actually, you can see I placed all of these around the same time. and they didn't do so well. I'm being very transparent. They didn't do so well. But anybody that tells you they win all the time and never lose is full of it. So they didn't do so well. But we're just going to keep going. And as you can see, 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 all right, it turned out pretty well after all, right? You know, I had some losers in there. I had to cut some losses. But overall, from May 13th, 2025 to down here at the bottom, the very last dollar yen transaction, which is today, June 4th, 2025, I've made a total profit of $4,667.59. Okay, swap is what's called your I keep wanting to say carry trade. Well, it's your carry trade. It's your rollover, right? It's your rollover, and the reason they call it a carry trade is because it carries over into the next day. Rollover really means the same thing. Basically, every 24 hours, based on your currency, whatever 24 hours is for your currency, when it rolls over to the next day, there's interest made or there's interest that you pay, right? So in this predicament, I had a combination of payments and credits, and it came out to be a net loss of $21 that I had to pay in interest. So swap is $21.11 of interest that I had to pay for holding my positions, and I ended up with a balance of, like I said, $104,646.48. So it's not too bad, right? From the 13th to the 4th, it's a couple of weeks, right? It's a couple of weeks, $4,000, not too bad. And that's not even, I'm not even really like putting big positions on, right? Like all of my positions are very small. I'm only trading, you know, at the most, I'm trading like 10% of the entire balance, right? So out of 100K, I'm only really betting up to $10,000. And most of the time it's less than that. Most of the time it's like $5,000 or $6,000. And you're like, well, if you got 100K, why are you only betting that much? Because you will, I don't care who you are. I don't care what they're talking about, what they tell you. Even the Wall Street professionals lose money. And sometimes they have a losing streak. Sometimes no matter what your analysis is, it does not work and you end up losing money. If you bet big and end up on a losing streak, you end up losing all of your money. The name of the game is to stay in the game. You can't win it if you're not in it. And if you lost everything, then you can't be in it. So you play small bets. You only bet 10, no more than 20% of your account at any given moment, right? And you cut your losses fast. I'm not talking about a 10% loss. I'm not even talking about a 5% loss. I'm talking about 3%, 2%, depending on how big the trade is and how good you believe the trade is going to be based on your analysis. You may be willing to take a pullback of 3 or 4% because of the dynamics of the environment that you're in and how volatile things are. So you may pull your stop loss back 3 or 4% with the intention of maybe even doubling down on it because you're so certain. And the reason why you would even do something like that is because whenever there's trauma in the market, and it's supposed to push the market in one direction, people all over the world are shuffling money around, and that shuffling can cause it to go in a direction opposite to what you think it should be momentarily. So sometimes you get that pullback, even though it should be going in the direction that you feel it should be going in, you get that pullback because of all of the shuffling. Now, does it always work in your favor? Sometimes it do, sometimes it don't, which is the reason why you have to set a stop loss, because if it goes past that, you need to just cut your losses and then start over. Take a break, step away, let your mind clear, let the market do what it's going to do, take another look at it later after it's done what it's going to do, and then you go ahead and you place your next trade. And you may end up, not getting in at the price you want to get in at and leave some money on the table. That's okay. Making money, big or small, is okay. Losing money is what you don't want to do. So you got to get in this mindset that just because you didn't make all of the money that you still done well. Okay? You can't get into the mindset that, oh, if I didn't make it all, I didn't do well, or I left money on the table. And you start worrying about that. And then the next trade you do, you stick into some stuff that you should have jumped out of. And the next thing you know, you have these big, big losses. You need to stick to the discipline. 2-3%, maybe 4%. Cut my losses, step back, take another look at it, jump in it when I know I'm going in the right direction, and then make my little money. And if I break even, cool. If I make some of it back, cool. That's okay. That's not the end of the world. There are trades behind it, right? If I make more than I lost, great. That's even better. But that's not the end of the world, right? But when you get caught up on trying to do one trade to make up all of your losses and try to make yourself rich, that's where you lose your money, guaranteed, every single time. Because you make bad decisions, okay? So you gotta be fluid and not worry about losses and not be so concerned about everything being a winner. There's some winners, there's some losers. Okay, so anyway, this is for the month, right? So that's a couple of weeks. Just today, I'm just gonna switch this to today, right? So this was my trading for today, right? $111, $112, nothing big, right? $339. That is not a lot of money, but $339 day in and day out, it starts to add up, right? And this is what I mean by I've said it in a video a long time ago. You don't get rich overnight. I don't care, what people are telling you. Yes, some people get lucky and they bet big and they end up winning and now they're instantly rich, but that's very far few in between. If you want to make money in this game, you've got to take your time and understand it's going to take time and patience and perseverance and determination. And most importantly, keeping your ear to the ground, knowing what's going on, know what's going on in the market, understanding policy, understanding financial shifts, the bear market, the bull market, how it's priced. Like knowing all of those things is what's going to help you. Just reading headlines and listening to your friends, that's not going to get you there. So anyway, now that we can see, right, that my trades can make some money, I'm going to stop right there. I hope you enjoyed this video. I hope you found it informative. I know it's all over the place and kind of rough and raw, but I just wanted to give you a broad stroke of what I'm doing, what I'll be talking about, and I'll get more in depth in other videos. So like it, leave your comments and share the video. Let me know what you think, and hopefully we can get some content out that is really helpful for you and can help you improve your investing and trading game. Until then, happy trading.